एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
At the outset, wish everyone a very happy Dashera greetings, Saraswathi Pooja and Vijayadashmi. And at SIRC, we thought that it apt that, we do a Saraswathi Pooja knowledge series on tax audit reporting. Tax audit, when it came in its simplest form in 1984, marked a history in the CA profession. And it opened up a whole new opportunity for us by actually giving us the responsibility of ensuring that the accuracy of the books, which is maintained by the SSC, and that the books on which the the government, the tax authorities actually rely upon based on the returns which are audited by us. But over the years, so many significant changes have been made in this tax audit report, because of which the scope of the audit is also increased and widened, and it also reaffirms the responsibilities and the trust which the government is reposing in us as chartered accountants. And as the regulatory environment is evolving, both in terms of the tax compliances and what is expected out of us as professionals, it is necessary for us, even though we think that yes, I have been filing returns for so many years, and what is the doubt which I will have? And, I keep thinking, why am I going back over and over about the same, on the same topics? But, we as professionals know that revision is always extremely necessary for us to, be confident about what we are certifying. And it always helps that somebody is actually, sharing their perspective to us, their experience to us, which is going to help us to be confident about whatever we are going to certify. And we all know the value of our UDIN, the value of our certificate, based on which all the stakeholders are going to depend on us. So welcome again. And I know that this is a long weekend, and it was very heartening for us at SIRC. We've got more than 300 registrations, and the number of people joining this program is only increasing very fast. We are doing this over a period of 4 days on the tax audit, and one day we are having a session on using AI in the tax audit report under the aegis of the AI committee. And I would also like to place on record here my appreciation to all the faculties whom I reached out to. They immediately accepted when I reached out to them, even though it is a long weekend, and we are imposing on them to come and share their expertise with us. But that shows their generosity, and this shows the members' quest for knowledge when they come and join us on these sessions. And we decided to do these sessions online because we thought that we can reach a wider audience, and the lag period in a holiday, when you sometimes want to do something professional, we thought we will take this opportunity to give some sessions on tax audit for our members. So today we are having the introductory section on the concepts Form 3CA, 3CB, etc. And we have a speaker, CA V Shankar, who's a senior chartered accountant, very, very well versed in all these compliances and other issues. I'll give you a brief profile of CA Shankar. Shankar sir, thank you very much for accepting our request to come and share your knowledge here. Sir is a botany graduate from Vivekananda College, Thiruvedakam West, near Madurai, Gurukula Institute of Life Training. He was bestowed with Best Student Award during his college days, and he also secured the outstanding grade in his BSc degree exams. He was actively involved in NCC during his college days, and he's a C certificate holder, and he also represented his college for inter-college ball badminton competition and table tennis. He did his CA course under Sri CAP Chandrasekhar Chennai, and he's now in practice for about 25 years. And he's a senior partner in GVN Shankar & Co. Chartered Accountants. He's taking care of compliances and tax areas, and he's concentrating in the field of direct and indirect taxes, specifically appeal-related areas. So I think that we're going to have a lot of knowledge sharing in what is going to actually lead to some form of litigation. He has appeared before the direct and indirect taxes tribunals, and he regularly presents papers in various seminars and lecture meetings conducted by various professional forums, study circles, and industry trade associations. He also conducts the career guidance programs, and he has conducted many academic as well as motivational programs at various schools and colleges for students and teachers. He's a voracious reader, traveler, team builder, and motivator for students, particularly from the rural areas. Welcome, sir, again to this program, and thanks once again for your generosity in accepting our invitation and coming and sharing your knowledge. And welcome to all the members here who have come in spite of this long weekend and a holiday mood. Hope you all had a good Dashera. Thank you very much. So over to Shankar sir now. Shankar sir, the stage is yours. Thank you.
Thank you.
Thank you, sir. And friends, before as sir is sharing the screen, I also wanted to share a small nugget of information here. I was speaking with a very senior chartered accountant the other day about our series on tax audit. And he immediately said, Madam, I have people generally reach out to me with a lot of doubts about the tax audit reports. I'll share the queries with you, and maybe they can also be addressed during the sessions. And I have shared these queries along with all the speakers of the various sessions. And they have promised to actually address the questions, whatever is applicable for them during those days. So we will have a different type of knowledge sharing also. Sir, the screen is yours, sir.
Shall we start, sir?
Yes, sir. Please start.
Good afternoon. Warm good afternoon to everyone. Shri Gurubhyo Namaha. I submit all these so far made presentations and this presentation to my gurus. Before we are going into the tax audit, just we are going to have about the overview of the tax audit. As our chair person already briefed, the department is relying upon the chartered accountants to cover certain areas about its accuracy, to minimize their work, and to check that whether the respective sections, provisos, rules, regulations, requirements of the law has been complied with the assessees. As we know, it is not applicable to all the assessees. It has been made applicable to a few assessees who are exceeding certain threshold. We are going to discuss overview about the tax audit related matters. And I know that they have coined the program in such a way that there are persons going to discuss about the class by class matters also as far as the Form 3CD is concerned. We'll see the overall view and few nuances at certain places where there can be more than one view is possible. Regarding the tax audit, first let us keep one thing in mind. We are doing tax audit to an assessee. So let us clearly hold that we are only a consultant to them. We are not the assessees. We are not the assessee per se. If we lose this clarity, then we are going into the tax liability part. We are going to penalty part as if we have become the owner of that business. We are going to face the issues like that. Mentally, we are having such a kind of attributes, and which takes us to not to deliver the goods, not to deliver the expected quality of the work to the assessee, to the government. Conceptually, we are doing tax audit. What the tax audit means? Certain clauses they have already coined in the 3CD form. Those clauses we will see, and we will fill those forms. We will report it to the assessee. Assessee is submitting that form to the government. That is the overall idea. So the forms are to be submitted to the assessee. That's how the electronically also we are doing. In tax audit, we know the threshold is for business 1 crore, for profession 50 lakhs as per the law. But I would recommend all our colleagues that we should see the 44AB section, Rule 6G, and relevant other sections like few sections 32 or 271 or 80s, all those things, wherever the 43B, capital B, all those things again and again, because there are so many changes during this year. We are going to concentrate only for the year financial 2024-25. During this year itself, there are so many amendments the government has made. So every year we need to read the section, we need to see the notifications, we need to see the rules. Then only we can understand the perspective of that amendment, applicability of the same. As we are progressing, we will touch upon few other things. For planning of the tax audit, what a chartered accountant should do. We should see let us assume this is a company audit. Already statutory audit has been done, and we may be the same person is doing the statutory audit and tax audit, or different persons can be there. Different firm can be a tax auditor for that statutory audited company. In these cases, we have to plan our complete tax audit procedures. We should have our resources allocation. These are all the very basics. We may do it, but that should be recorded. I wish to cover this tax audit concept and applicability and other things from the perspective of the Income Tax Act as well as the perspective of our institute. Our institute has formulated one tax audit quality review board. That board is reviewing our tax audit works. So let us try to satisfy ourselves and the board's requirement, that is called a tax audit quality review board's requirement, and peer review. If there is any peer reviewer, let us see that whatever the requirement of the law that are put in place, like appointment letter, like proper working papers, like there is no interested persons, that is articles or audit staff has done the audit, all those things. So in the planning period, one has to take care about all these preliminary items, whether in that case, tax audit is applicable or not, whether they have exceeded the 1 crore or 50 lakhs. If it is, they have exceeded 1 crores, then we have another provision that whether 10 crore they have reached and their cash expenditure, cash related transactions are less than 5%. This applicability thing we need to check. If it is satisfied, that has to be noted somewhere. Based on this, I am doing this tax audit. Why it has been triggered 44 AB, A, B or C, that which under which class this tax audit is falling. Because based on that, few requirements may change. So that has to be the starting point. Number one, we should have the proper appointment letter for each year for the tax audit. That should be the best practice. Number two, whether I am going to take up the 3CA, 3CD or 3CB, 3CD. If that accounts has already been audited under some other law act, then I should go with 3CA. In the 3CA, I will be filling up that auditor's name, that audit report, that act, that audit report date, everything. So let us take, for example, if I am going with already, audited accounts, I am going to audit has been done under some other law. Now I am going to do the tax audit. In that case, that report should be with us while you are doing this audit, because we need to fill that date in this 3CA. There can be one scenario that it is a private limited company. It is compulsorily to be audited under CARO, but there is no audit has been conducted. In that case, you cannot use 3CA. I repeat, it is a private limited company. It should be audited under CARO, but due to various reasons, there was no CARO audit has been conducted under the company law, Companies Act 2013. In that case, we cannot use 3CA, 3CD. 3CD is only annexure, but there only all the datas are called for, datas are we are filling. 3CA and 3CB are main reports. So in this scenario, we will go with 3CB. This is one scenario. Second, it is a company, somebody has already audited, audit report has been submitted, everything is over. We have been appointed as a tax auditor for that company for that year. We have come across certain thing which is abnormal, which is not correct. Not correct in the sense, a sale has not been considered. A purchase has not been considered. Something materially, some issues has been identified by you as a tax auditor. Then what we should do? We should take that matter to the concerned board. We have to inform them. We have to request them to, if the other law, it is a company law or any other law, if it permits, you relook into the tax audit reports. If it is not possible, you do the tax audit because your purview is only about the 3CD questionnaires. Let us complete that questionnaire, and in the 3CA itself, you have a suitable place under class 3. There, if you are having any observations, any qualification, there we can mention. Likewise, in 3CB also, there is a separate place is available under class number 5 in 3CB. There we can mention our observations. Auditing, filing is one aspect. What we felt about a particular item, that should be communicated. That only place to communicate our feedback, our observation, our qualification is the class number 3 in 3CA and class number 5 in 3CB. There, I request all the members to kindly express wherever if you feel there can be 2 or more than 2 views on a particular aspect. It will safeguard ourselves when the company or any other transactions are in problem. If there is a quality review board query, if there is any query from any other governmental organization, this observation only will safeguard us. And sir, we will go to the next slide, sir. And while these things madam has covered, we'll go to the next slide, sir. Next slide, sir. Next slide. Right. Here, 44 AB is a section dealing with tax audit. 44 ADA, presumptive taxation for professionals. Here in the Act, they have defined the professionals, and 44 AD is for small businesses. They are only in professionals, 50 lakhs. If the gross receipts are exceeding 50 lakhs, then we are into the tax audit net. In presumptive taxation, if we are not able to show 8%, then we are we have to go under tax audit. Here, one catch is that in small businesses, if you are doing tax audit, there few complaints are not required like TDS, because you have a converted case, you need not worry, but because you have not crossed the threshold of 1 crore. On other account, you are coming under the tax audit, so you need not worry about the tax audit under those circumstances. Sir, next slide, sir. Here mainly I wish to concentrate applicability of tax audit for assessment year 25-26. There is one notification from the government, notification number 23/2025. That notification, through that notification, they have brought in this MSME related interest and outstanding everything they have brought into the statute and forms. Their notification number 23/2025. So the form got amended. Particularly, there are a few clauses in 8A also they have amended in October. So during that year, the form got amended. Now the point here is one more important aspect I wish to bring it to your knowledge. The form got amended, filed notification 23/2025. Let us assume we are doing tax audit for the assessment year 21-22. We are doing the tax audit for 21-22 or 23-24. Whether I should fill up these columns, the opinion is yes, we need to fill up the column, because the date of signing is the crucial point. I am signing this tax audit report today, so I have to apply all the clauses for 21-22 also. Here the catch is, at that point in time, this 44BH was not there. What we will do, we should give suitable note that this class was not, this section was not there, so it has been, there is nothing to comment on that. But we need, if that, let us assume that class is there, that section was also there at that point in time, that is 21-22, then we have to fill that form. So we should be very clear that they have amended the form. The form is applicable with the effect from 1/4/2025. So whatever the year we are signing that form, that respective class should be filled up. This point we need to keep in mind. Sir, next slide, sir. Next slide. So these are all the few other literatures we need to go through. Guidance note on the tax audit. Our institute has issued guidance note in 2023, and recently our institute has revised the tax audit guidance note, and 2025 they have issued the recent tax audit guidance note. It is very important for us to go through this guidance note for the purpose of whether it is what are all the gross receipts, what are all forming part of the gross receipt, what are all should not come into the gross receipts. What is the treatment of the MSME? Whether the company should disclose about the interest, everything they have clearly dealt with in that guidance note. At least we need to go through, and the team and the resource which is going to do the tax audit should have the knowledge about the guidance note. This is very, very mandatory, because Act says particular thing. How to interpret that? Only our institute's guidance note only will safeguard us. If our understanding, our filling of the form is as per the guidance note, then we need not worry about any proceedings that will safeguard us. And in the guidance note, particularly para number 5.13, they have given the list of items which are to be considered part of the gross receipt. In the financial statements, that company or that firm may or might have disclosed that items under liabilities or under the other sources somewhere else. But as per the guidance note, they have clearly listed out that is not exhaustive list. That is not exhaustive list, but that will give us the clue what are all should come into the basket of gross receipts. And para number 5.14 clearly dealt with what are all the items not covered, should not be covered, need not be considered as a part of gross receipt for the purpose of 44AB. This is very crucial. This we need to go through at least once or twice, and our team member should know. The person who is deciding the tax act applicability should know. Because once we know this, then only the preparing the resources, allocating the resources can be planned appropriately. And our quality review board has given some 3 excellent literatures are there. In the Tax Audit Quality Review Board, TAQRB site, you can see that there are 3 items are available. One is checklist. They have given checklist. Second one is quick referencer. They have given. And the third one is very important, based on their verification of so many tax audit reports. They have identified few areas where our members are not properly discharging, properly disclosing, properly attesting this tax audit related function. Those that tax audit QRB summary of the shortcomings we need to go through to avoid those areas. Like they are the predominantly 43B is not properly filled by the tax auditors. That is one observation is there. These things can be easily avoided, but this is a few we may be taking care, but that is an overall view based on their verification of some 1,000-2,000 tax audit reports. And clarification on each classes of 3CD is available. Each class what it wants to say, what is to be reported, how to be reported. Next slide, sir. This is the one I have referred. You please go through this notification. This notification is available in the portal. There they have mainly covered class 22. In class 22, just I'll spend class by class persons are going to take. Only class 22, I want to spend some 2-3 minutes. Class 22, amount of interest inadmissible under section 23 of the MSME Act. Or point number 2, total amount required to be paid to a micro or small enterprises as referred to in section 15 of the MSME Act. Third, of the amount referred in 2 above, amount paid up to the time given under section 15. D, not paid up to the time given under section 15 of the MSME Act. Normally, whenever we are filling up one column or 2-3 columns, we will try to reconcile that columns. We will see that it is matching, the total is matching. One breakup there, another breakup is there, that is matching or not. That's a normal mindset we are having. But only I request our members to please listen once again. I'm reading this. Amount of interest inadmissible under Section 23 of the MSME Act. This is first item. If I am debiting any interest and I have not paid, then that will get disallowed. Few cases, we are not providing that interest. So the 20-1 will be 0. Or second item, total amount required to be paid to a MSM, micro or small enterprise during the previous year. Here only we should see total amount only we should disclose here. The third item of the amount referred to in 2 above paid up to the time given. So here these 2 and 3 need not match. There can be mismatch. This is one aspect we should keep in mind. Because of it is not matching like that, we need not spend too much time on that. It will not, it may match, it may need not match. It need not match also. And one more thing I want to draw, these are all latest amendments. This we need to take it into consideration while we are planning our audit. Under clause 21, please furnish the details of amounts debited to the profit and loss account, being in the nature of capital, personal, advertisement expenditure, etc. This is the heading. There in the last class, expenditure incurred to settle proceedings initiated in relation to contravention under such law as notified by the central government in the official gazette. So in this class, they are talking about only violation under such law enacted, notified by the central government only. These things as on date, there are only 4 laws are there: SEBI and the Securities Contract Regulation Act, Depository Act and the Competition Act. Why I am bringing these exceptional items are to our mind is we have to be very careful on the newcomers to the firm. Next slide, sir. We will take up a few exceptional cases and see, sir. Now, how to check the gross receipts, how to arrive at the gross receipts regarding these kind of activities, commission agents, petrol bunk dealers, etc. We need to see the guidance note for our particular specific case. Our general institute's general idea, opinion is commission only should be treated for the purpose of arriving at the gross receipts. But when the transaction is like principal to principal, then you should take everything. When the transaction is principal to agent, you need not worry. Here you can see that if the ownership or risk remains with the principal, then commission alone I need to take. There may be some 2 crores transaction through my bank account. Like, let us assume I am a stamp vendor or document writer. I am receiving huge amount. Exact amount I am paying in his name to the government. My remuneration, my commission or my payout is only very small amount, like 2% or 3%. In that case, I need not worry about the amount which is received and gone to the government authority in the party's name itself. In such a case, I need not worry. In the case of petrol bunks, in some other cases, I may not have any control over the selling price, but still the goods ownership is remaining with me. In that case, I have to go with the full value. And in case if there is no clarity, then you can discuss with the client, see the contract. If there is any contract, that contract we need to study. There is no contract, the client says something, you could not come to any proper decision based on that oral discussions, then you take the gross receipts as per the bank statement or as per the invoice raised, and you can decide the applicability 44 AB. Because when there's a contract, written contract only, you can come to a solid conclusion that risk and rewards remains with this assessee or remains with the principal. If it is not clear, apply the tax audit. That is my humble personal opinion. But we need to refer the guidance note. There they have given how to identify the principal to principal, principal to agent related transactions. That will give us a very good supporting document as far our decision making process. Next slide, sir. There are few transactions are happening in a particular case. That assessee is doing some 35 lakhs, 40 lakhs transaction. There is a sale of land. That land is there in his balance sheet. That sale of land is happening for about, say, 10 crores. Or sale of machinery is happening. Investment is happening. Whether I should apply the tax audit because my gross inflow is exceeding 1 crore or 2 crores. I am not also within the 5% of cash expenditure ceiling. My cash outflow exceeds 5%. In that case, should I come under 44 AB or not? For this matter, first underlying basic lesson is, basic concept is that the transaction should be chargeable within PGBP. If it is other than PGBP, it need not be considered for the purpose of gross receipts computation. This we should keep it in mind. Your P&L may have that, but while computing, we will exclude that. If it is going under the capital gains head, then it is not under the 44 AB requirement. If that land is my stock in trade, then obviously we know that should be our business transaction. That income, that receipt also should be considered for the purpose of arriving at the 10 crores or 1 crore, as the case may be. Next slide, sir. Now, in the 3CA, we have discussed. 3CB, let us take. In the 3CB, it is you are only the person going to audit the accounts. You are going to sign the tax audit report. So we are not going to refer any other audit has been done, or like 3CA, there is no such reporting out there. In that case, while you are certifying the balance sheet, profit and loss account or income and expenditure account, as the case may be, we have to clearly mention that our audit is only restricted to the tax audit purposes alone, not under any other law for the time being in force. Because let us assume one firm is there, that firm we have audited, and we are also filing 3CB. The user of the balance sheet of the firm should not misconstrue that this has been audited and this auditor has covered all the aspects of the requirement of the guidance note, SCS, AS issued by the institute. There, while you are signing that balance sheet only for the purpose of tax audit, then we have to clearly mention that this is only for the purpose of tax audit report. And while we are filing the form in the portal, we used to file the 3CA 3CD or 3CB 3CD. Before that, we have to add that firm or individual sole proprietor as a tax auditor to enable him to file the tax audit report. This is the requirement based on the system. Now, the income tax portal is warranting that. That assessee will add us, we will accept, then we will file the forms, the assessee will approve it. While doing this, before doing this, we request you to take your appointment letter. That is the ideal practice. That's the best practice. We request you to take the appointment letter before that person is adding you in that portal. Next slide, sir. And next slide, sir. We have covered this. While planning this audit, the auditor, if the same person is auditor under Companies Act also, he might have taken few data while he was doing the Companies Act audit for these clauses 43B or whatever the clauses. If it is not covered under the Companies Act or some other act, you have to plan properly. While you are taking the extract from the company, while you are taking the extract from the books, take attestation from the company as and when you are taking. Because if you are missing that, then there's a chances of without any signature, we made that may part of our working papers. If we are taking attestation or some evidence that it has been taken from their records, then while there is any query, you can substantiate that with their knowledge, it has come to our knowledge. Based on this, we have come to this conclusion. Based on this, the reporting has happened. If there is no back paper for your decision, our quality review board reports and other review reports says that institute or peer review board is not going to find fault with our right opinion or wrong opinion. They are only on our opinion making process. So we have undertaken these kind of process to come to this conclusion. Conclusion is your professional privilege, professional independence. So back papers are very important. If there is no back paper, you please report accordingly. And while we are taking the back papers, this MRL is very crucial document. Wherever the column you are filling, wherever you are not filling, you appropriately prepare an exhaustive MRL. Few may say MRL will not safeguard us, will safeguard us. All those are opinion. But while we are doing the audit, it is our duty to ask the clients about a particular aspect, clarification or something. He will tell us some reply. Based on that, we will come to one conclusion. That is only MRL. If there is no MRL, then we have not asked anything, we have not replied anything. Whatever we have filled, that is majorly that is based on our presumption. That may be the conclusion reached by the other end while there is any issue. So MRL is very, very important. If this MRL is there, if the working papers are there, if the appointment letter is there, and our team has already seen relevant clauses of the guidelines note, then we are fairly completed the tax audit. In that way, we can be happy. Next slide, sir. Sir, next slide, sir. Sorry, this we have discussed anyway for at the cost of repetition. 43BH strict compliances the government is expecting from our CA fraternity. And this TCS matters. These things we need to be very, very cautious. The TCS matters. The company, the assessee may have certain different opinion about the nature of the job done by his vendor. We may have different opinion, that is secondary. But whether deductible amounts were deducted and remitted. If there is any NRI payments are there, that has to be properly verified. if there is any shortcoming, it is better to bring these things beforehand to the assessee and alert them about the penalty and other consequences that are going to follow him. Because once, if you have reported, then they have to clear that if any shortcoming we have reported under TCS or TDS, then that assessee should clear the matter at any cost. Now, why the department is asking us to file the 3CA, 3CD 1 month in advance? Because we have completed our audit, we have given our observations to the government as well as to the assessee. Assessee has gone through everything. Wherever shortcomings are there, wherever liabilities are there, wherever disallowances are there, they can make it good before filing their return. While filing their return, this tax audit shortcomings, they should rectify, and while they are filing the return, it should go as a tax audit shortcomings complied return. That is the expectation of the government. In these TDS, TCS matters also, if they are going to comply while they are filing the tax audit return, it is well and good. Because let us not wrongly assume that I have disallowed 30% in the income tax memo for TDS, non-deductible TDS payments and TCS violations. It is only income tax disallowance at 30%. But on the other side, that officer in default, that violation under TDS provisions always exists. Unless you are deducting and paying, or you are paying, or you are producing the Form 26A certificate from the other end, unless we are not clearing that part, that other side, other liability, that is deductible and payable liability, always hanging on our head. So we cannot presume that 30% disallowance, everything has gone, it is okay, we can forget about it. That attitude will not hold good. And about the first section, the clause 44, somebody will handle it. Anyway, for the purpose of specific matter, I want to bring it to your attention. Breakup of total expenditure of entities registered or not registered under GST. This clause is already there. Few years back, it was not given effect. Now we have to report. In this cannot be possible only within a month or within 15 days. It is not possible. It should be factored while entering the accounting entry in the system itself. So that books of account should be tuned to the requirement of the tax audit report. If it is so, it is very easy for us to cull out the details and report to the management and to the department. Here you have to give total amount of expenditure incurred during the year. Out of that, relating to goods and services exempt from GST, relating to entities falling under the composition scheme, relating to other registered entities, total payments to the registered entities. Here the catch is, many data, whatever we are reporting here, should be matching with other reported or to be reported forms with other authorities. For example, in this tax audit report, we are going to give total turnover. That total turnover will not match with the GST turnover if the same company is having so many depots under many states, or so many branches in same state under different GST numbers. One GST number to another GST number supply will be treated as supply to the third party. So that reconciliation we should have. Otherwise, in GST, we will have huge turnover, huge supply. In income tax, we will have lesser supply. Both are right, but the figures will not match. In such cases, it is better to have separate reconciliation statement for state-wise, within the state-wise, and pan-India basis. And in the case of your TDS payments, your entire TDS payment need not be your current year's expenditure. It may be a capital work in progress. It may be an advance payment for a specific thing, partly work might have been done. It may be 194 M. It may be 194 N. There is no income or expense, only your cash withdrawal, TDS. These aspects separately we need to have annexures with each column, and that should be form part of our tax audit report. If the company's magnitude is big, it is better to have class by class team which has worked for that class, that details taken from the company, details taken from the other sources, that is like SRO or GST reporting, all those things. Like that, if we have for any reconciliation, it will be handy. Now we have 5 years time to reopen this income tax related matters. So minimum we should have these back papers for 7 years. We'll go to the next slide, sir. Sir, next slide, sir. This we have covered. Next slide, sir. Next slide. One second, sir. Back, sir. Here, this is what we have discussed. This is the issues flagged in last 3 years. Important issues. I have listed some 5 items. First one is non-reporting of disallowances under section 43B and 40A. This is in many cases, the tax audit quality review board observed that there is no reporting at all. There should be a disallowance, and in few cases in the IT memo they have disallowed. In tax audit report they have not done. 40A also some disallowances they have identified. And in few cases incorrect turnover computation. Few cases, so because of the turnover we have became a tax audit case, 44AB case. But even after that, that reported turnover after this adjustment is not correct. That is the observation made by the quality review board. The third one is very, very important, inadequate working papers. For example, if there is any changes in the partnership firm, that changes in the percentage of sharing of profit or loss, name of the partners who have gone out, those we should have as a working papers. If there is any tax audit quality review board visit, then if it is not there, as per the return, there's a changes in the partners. But in the tax audit report, the old partner's name and the percentage of sharing, profit sharing ratio only was reported. In these cases, the quality review board says each item from the name, address onwards, it is expecting the members to have the back papers with us. Failure to report related party payments is very, very crucial. Now in the quality review board, inadequate working papers is a major issue because we are doing our job, but we are not recording it properly. That was the observation. So we need to have separate working papers for each classes. That will be considered as a very good practice. And as we were discussing in a partnership firm, there's a changes in the partners, changes in the profit sharing ratio, but it has been properly reported in ITR, not properly reported tax audit report. These kind of things are sending a wrong signal to the board as well as the peer reviewer. It's better to have all the working papers very properly, so that in case of any requirement, we can establish our basis of our opinion. In the related party, we have discussed lack of clarity in accounting method disclosure. Here also, accounting method disclosure means 2 aspects they are dealing. One is whether cash or mercantile, that is one aspect. And another one is in case other than company, firm and other assessees. we are taking a decision that this is a tax audit case, but their plain profit and loss account may not have that 1 crore ceiling. We are bringing the items from other hits, that is from liability side, we may take it, or from here we can move it. But it should be taxed under profit and gains from business or profession. That only the crucial point. In those cases, we need to record our opinion, how we are dealing with a particular line item, and based on which we are bringing that as a tax audit case or non-tax audit case. Because once we are not deciding that as a not tax audit case, that is different. If you are deciding this is not a tax audit case, but it actually is a tax audit case, then we need to establish our stand in writing, and somewhere it should be recorded, and it is better to take counter sign from the assessee also. And we should keep one thing in mind: it is a tax audit case or not, it should be primarily decided by the assessee. Primarily, assessee should decide and bring that accounts to us. We will see and we will advise. This is the ideal situation. It may not happen at times. In those cases, then it is our duty to explain to the assessee and see that proper position of law has been explained to him. So I request all the members to kindly go through our guidance note and tax audit quality review board's observation at least once. Next slide, sir. They have also suggested few things. Many things they have recommended, few things which I felt very appropriate for us to follow, and we must follow. Strengthen the audit documentation. This documentation means from the appointment letter. While they are adding us from that appointment letter, we have to have the clear audit documentation. They are expecting us to have it. Clear mention of reliance of MRL. So this MRL plays a very vital role. We are taking representation from the management regarding certain things. And after receiving that, what we are deciding, that should also be we have for our reference purposes. So how far we have relied, whether based on that we have dropped something or we have added our comment, we have qualified our thing, that should also be part of our documentation, and this is very, very important. MRL should be there. Based on that MRL, what we have decided, that should also be there in our files. Training on new reporting classes. This is this year very crucial, because our team should be given the proper understanding about the amendments. Since it's the MSME related, it is, for example, if it's a MSME related amendment, our team should discuss about the MSME Act, interest rate, whether charged or not. Those kind of academical enriching training should happen in-house, because we don't have enough time and many data were not originally captured by the company. Few data may be readily available, like PF payment, PF data of payment, expected data of remittance, actual data of remittance. Few things are readily available. Few things we need to compile. Few things, few software may have, few companies may have, many companies may not have. For example, this class 44. They may have ITC related matters, but in many cases, the composition dealer, the breakup, they may not capture from the day one. In those cases, it is better our team should be equipped to see how they are going to plan that audit. On the new reporting classes, not only on the new reporting, on each classes, we should equip our team members. Timely updation of audit checklist that we have covered. Ensure peer review complaints for tax audit engagement. Here only peer reviewer are there to verify our records, our decision-making process. They will not worry about your decision. Our decision is our domain. We can take, but they will see for each tax audit, for each statutory audit, whether the same person is not, we are the same auditor or not. We should take appointment letter for each year, each tax audit. From that, the peer reviewer will see. This is very, very important as far as the peer reviewers concerned. Next slide, sir. Now we'll see some other broader aspects. Revision of tax audit report. Normally, after filing, we have come across certain problems, certain issues, certain changes. Under what circumstances, broadly, tax audit reports can be reviewed? When there is a clerical mistake, mathematical error, we can change the tax audit report. Retrospective amendment, we can revise the tax audit report. When there is any CBDT or IC, let us assume on the date of availability of 3CA, 3CB in the portal, I have filed the tax audit report immediately. After my filing, second day, third day, some clarification is coming. Then we can revise the tax audit report. Any material misstatement detected after filing, we can revise the tax audit report. But here we need to mention in that report as well as for our records why we are revising the tax audit report. This is very important. And in few cases, there may be one tax audit done by one person, another revised tax audit may be done by another person. All those things, the second audit, the person who is doing the revised tax audit, he should take very many precautionous things, like taking NOC to why they are changing, what is the impact, all those things he has to keep it in record, because while you are revising the system, how the system is working means our data will be taken on one side, ITR data will be taken on the other side. It is comparing, and wherever there is a mismatch, it is throwing the difference. So when we are revising, let us see on a practical aspect whether 143.1 has already been done by the system or not. All those broader aspects we need to, whether it is having impact or not is secondary. But as a professional person, we need to see at what stage we are revising, after 1 year, after 6 months, immediately when we are revising, why we are revising. That should be very clearly mentioned in the report itself, as well as for the records, our records, we need to have it. Next slide, sir. We have covered, sir. Next slide, sir. Next slide. Here, few points only we have covered broadly. Documentation in our files, in the tax audit files, audit working papers, client's trial balance, ledgers and invoices, MRL for key areas. And this MRL area should be reported in 3CB observation also and 3CA observation also if you want to safeguard your position. So MRL and 3CB observations are better, because many things we cannot, 100% we cannot see in many big corporates. Like 100% cash verification, if you are not in a position to do it, put it in the MRL, do the test check, arrive at the proper percentage, do the check. And nowadays there are so many tools to arrive at the which day you should select. If you give the dump, it will give you the result. With these dates, you should check all those things. We need to use the latest available tools to identify the vouchers to be verified for the purpose of these cash payments, TDS and other things. And the copies of agreements for MSME timelines. This is very crucial. Many companies are ready to give us, only thing we need to insist them. If there is no contract, you ask them to put it in writing and get it. because we are taking a decision about the disallowance. If we are not, few are telling that you take the address, you write to them. That is very ideal situation. You inform the company if they are not going to provide, we can also write it. But you let us see that MSME compliances are done by the company. If there is any contract, let our audit team see that payments are within that period. It is not the outstanding as on 31/3 alone. Let us have the table of all the payments done after beyond 15 days or 45 days as the case may be. Then we will come to the disallowance part. But we should have the details of the payments made after 15 days. And the evidence for TDS compliances are very crucial, because in case of any payments made to overseas vendors, overseas payments, then it is our duty to see that proper rate has been applied, whether the DTA benefit has been properly claimed or not. All those aspects we need to do. In few cases, 194M they are applying and 194Q they are applying. In those cases, that first 50 lakhs in 194M or 194Q, that also to be, because while you reconcile, there will be some gap. That should be the 50 lakhs should be removed from that computation. Those aspects may be very tiny, but it will throw a light of it will attract the attention. If you add the 50 lakhs also, then there's a mismatch in your purchases. So this kind of very, very small thing, we should be very cautious. Our team should be educated on all these aspects. Section wise, they should apply the law. Next slide, sir. Sir, next slide, sir. Here, ICAI recommends MRL for nature of business. You get it in writing from the assessee. That's what our guidance note recommends. MRL, they should be only explaining about their nature of business, turnover and accounting method. This should be very important, because normally we presume that only figures and other things only, it should be form part of our MRL. But the nature of business also, we should take it from the management. If it is there, then we are safe. The same thing we can also reproduce in the 3CB, and we can comply with the requirement. Confirmation of the PF, ESA and commission payments. This also, normally what will happen, this PF authorities inspection and the outcome is different. The company's complaints is different. Company will routinely deduct PF and ESA and do the professional tax complaints and other things. If there is any inspection in the PF department, then they will view separately. So it is our duty to see that if there is any subcontract has been given, whether they have taken care of that, whether we are to worry about that or not. That MRL should cover this aspect also. Related party we have covered. This related party, we need to see that related party as per the Companies Act is different. Related party from the Income Tax Act is different. So whatever is there need not be in the Income Tax Act also. But it is our duty to see that as per Income Tax Act, related parties payments were properly disclosed and any disallowances or record have been made. In the tax audit matters, at times trusts are also under the tax audit based on their transactions. That should be separately seen. Whether the related party under the trust has been covered here, those payments have been taken into account, that also properly disclosed while we are considering the related party related matters. Next slide, sir. We'll come to the UDIN related complaints. UDIN is our institute's requirement. We have completed the audit. We are going to file the form. At that point, we have to generate the UDIN. So the form is ready for the signature. UDIN is, as we know, unique document identification number. It is compulsory for all tax audit reports. it should be generated before uploading the return report in the tax audit portal. One, or if we are coming across something, some erroneous figure has been given while generating the UDIN, we have to give certain figures. If some erroneous figure has been given, we can revoke the UDIN within 60 days, within 2 days. And we can generate the UDIN for the past 60 days. That is, I have actually done that tax audit 2 months back. Now I can generate the UDIN. But best practice is, if we are doing tax audit today, you generate the UDIN today itself. Any by erroneous missing, only the institute has given 60-day time period. Let us not use it if it is not warranted. Erroneous UDIN we can revoke within 2 days. On 3rd day, that UDIN cannot be revoked. That is once for all, filed is filed. And this UDIN should be linked with our 3CB, 3CD in the income tax portal. That also we have to keep it in mind. In peer review also, when peer reviewer is coming, we have to submit UDIN list and the corresponding form for which we have generated the UDIN. There they can see the UDIN for 15 CACB, 15 CB, or tax audit report, or form 3CE, for what report we have generated the UDIN. That reconciliation we should be having on hand while we are completing the tax audit season. Because almost now all the units, all the practicing units are under the requirement of peer review, either this year or next year. It is better to have few things ready with us. The UDIN is the starting point for the peer review. So UDIN list, corresponding form, and the corresponding client name. If we have the list, then we can comply with the tax audit ceiling also. Each member can audit up to 60 tax audits per annum. If it is a firm of chartered accountants, per person 60. A same person can sign or each person can sign. That is not an issue. But if it's a firm, let us assume there are 4 partners, 4 into 60, 240 tax audits they can do. Same person, single partner can sign 240 reports, or each can sign 60, or one can sign 50, another can 100, but total cannot exceed 240. So for that check also, this UDIN is available. So we should be very cautious that when we are generating the UDIN, that should be appropriately matched with a particular tax audit report. Next slide, sir. In the UDIN, for the tax audit, for each signatures, UDIN portal is requesting different data. For UDIN, the required fields are client span, assessment year, document type, key figures. So it is advisable that let our team, let our staff member or team have this data. Once the tax audit report is ready, let them have in that Excel sheet or spreadsheet that these columns, assessment year 25-26, client span, document type, key figures. Let us have that. So whatever you are submitting, it should be readily available in our spreadsheet for each client wise. These things are very simple, but it will save our time while we are completing the work. Many things while we are preparing the report, while we are doing the audit, many things will cover. On the 11th hour, crucial data will not be available. Or on the crucial data, 2-3 options may be there, which file we should see, that confusion will come. It is better to have proper filing, proper folder procedure in our system. In the files, let there be some 3 folders. One is working, another one is back papers, last one is final document. In the final document, this UDIN related matters and that MRL, whatever scanned document, we should keep it. There in the balance sheet, in the profit and loss account and the CARO report, all the scanned copy should be there. And third one is system links UDIN with the tax audit report automatically. Opinion qualified, unqualified to be indicated in that UDIN portal. And safeguard against fake issuance of UDIN by tax audit report by somebody else. Next slide, sir. This is the adding step that many of us know. First, client will go as an authorized representative. They will add us as a CA. Please remember, normally for a company, we will choose 3CA, 3CD. For some extraneous reasons, the company audit could not be done, then your form, you have to fill only 3CB. So again, you have to add 3CB, 3CD, and then only you can able to upload the form. If you upload 3CB, 3CD or 3CA, 3CD, it is acceptable, not an issue. It will avoid it through 271B penalty if you are doing it in time. Next slide, sir. Sir, next slide, sir. This is our overall, in the current practice, non-identification MSME is a major thing. That assessee's job is to identify MSME or non-MSME, and appropriately they have to inform us. Based on that, we will disallow. This is the requirement. If they are not identifying, it is very difficult. That too, the small and medium only it is applicable. So that he may be MSME, but if he's not a small one, we need not worry. Those aspects client should take care. From client, we have to take the representation that we have written to all, and this is the reply we have got. They are not small, they are not medium, so there is no need to do any disallowance. Such kind of MRL we should take from the client's letterhead. It is better to take each item separately on his letterhead, not ad hoc MRL. Ad hoc you can take in 1 or 2 pages continuously on certain other matters. For few things, you take separate MRL, it will safeguard. We have also spent our time on that, and it will give weightage to our opinion making process. Over-reliance on client's confirmation without audit evidence. This is also one among the observation by the Tax Audit Quality Review Board. Oral reliance will not do. There should be a document support for any of the client's submissions that we should insist. If there is nothing, you ask them to put it on the paper and take it. And let us take the decision. Wrong computation, a late generation of UDIN is very crucial. Now what is happening? Let us assume we are filing one tax audit report for 24-25 or 23-24. You are signing that tax audit report today only. Today we need to take the UDIN. Back date only 60, up to 60 days we can go. Beyond that we cannot go. In that case, people will wait and lose the track of that pending UDIN generation matter. Then what will happen? This, after you are generating the UDIN only, that tax audit report is getting sanctity. If you are not generating, then we cannot say it has been filed by me, because it is getting completed only after we are generating the UDIN. So my submission is, the best practice is we are completing the tax audit today, we are generating the UDIN today. That should be the best practice. Misclassification expenses leading to reporting errors. These things, while you are preparing the P&L, and from P&L we are disclosing certain as per the class number 19, under class number 19, there is a new addition is there as per the recent notification that we have discussed, 23/2025. There we need to spend some time while preparing the 3CDA class number 19. These things, many things are not applicable to all the assessees, section 35 and other things. But any other relevant section, we need to spend time on that. So while we are preparing our tax audit plan, allocating tax audit resources, new clauses will take our time this year, and we have to spend more time on the educating our team. Next slide, sir. Our suggestion from the guidance notice, they have told you update the audit checklist every year. In the tax audit quality review board itself, in the site itself, they have given one checklist for tax audit. I suggest let us download that also. Quick references is there, that also need to be given one glance. And in guidance note, they are insisting every year we need to update the tax audit checklist. Use standardized MRL format. Standardized MRL format means for each item separate MRL should be there. That should be in a standard format. Staff training is very, very crucial that we have discussed. Integrate GST reconciliation. This is very important aspect. GST reconciliation is going to be a huge challenge this year, because the portal, the GST department is allowing the same assessee to have one more branch with different GST number in the same state. If there is another transaction in some other state, then obviously you should do. Now, in the same state, we can have a HO branch style transaction or distinct person transaction also. In those cases, A to B transaction, that's a branch to HO or HO to branch, both are within the same state also, will be multiplying your turnover. So that reconciliation should be there. So your 3CD figures versus AIS versus ATIS and your 26AS. All these turnover should be matched, should be reconciled. It need not be same. It cannot be same. But reconciliation should be there with us to establish the right figure and right disclosure. Review CBDT notification periodically, that we are doing. Next slide, sir. In case of any non-compliance, the assessee will be paying penalty of 1.5 lakhs or 0.5% of turnover. What is non-compliance? Within the given date, we have not uploaded the tax audit report. Uploading is the process is assessee is appointing us, we are accepting, we are doing tax audit and uploading it. Assessee is accepting it. Up to the acceptance only called filing. I have uploaded, assessee has not accepted, then it is not complete filing. So we should see that both the things have got complied, and then only that has been submitted. Now, before 1 month of the due date for filing returns, this tax audit report should have been filed. If I have not filed within that given time, then I should pay 1.5 lakhs or 0.5% of the turnover as a penalty under section 271B. There are so many case laws are there, decisions are there to come out from this, but let us try to comply with that and close this matter. Extraneous situation, fighting is always available, appeals are always available, but complying in time is always better. Next one is auditor liability. The 271B is assessee's liability. Auditor liability is we should be professionally do things and we should have all the back papers, working papers, MRL, and supporting documents intact. If it is not so, then we will be treated as a professional misconduct of negligence. Actually, many cases, the chartered accountants are doing excellent job. They are reporting very well, but in few cases, the working papers are not there to support their decision-making process. So let us first safeguard ourselves. First, let us have the papers, which is very, very important. Whatever we are thinking, whatever we are communicating our team, let us all put everything in writing and keep it signed and keep it in the record, in our records. Reputation risk is there. Quality review board review may highlight lapses. That we have to see. If the quality review board, it is not like other reviews. The tax audit quality review board can pick up any case. 1 crore 10 lakh case also it can take, 1,000 crores case also it can take. So there is no threshold or something like that. So any case they are having right to call for and review. They will review the tax audit report submitted. They will review the back papers. They will review the documentations, and they will give the clean check or they will advise us accordingly. So the quality review board review is also there. Peer review also is also there. Peer review is something different. Quality review is something different. Risk of litigation for both the clients and the auditor. This is before some other authority like any CBI or any other inquiry. If the client is in trouble, we will also call for, because so many agencies, whether it's a government agency or private parties or banks, are relying upon our certification. So it is our duty to see that our certification process is proper. Our documentation is proper. So we are answerable to many if something goes wrong. Next slide, sir. These notifications we have already discussed, the many notifications and other things. Next slide, sir. Next slide, sir. Practical tips for auditors. What we are doing is, you better have a checklist before you are preparing your team. The team members, they should not have any interest in that concern. Their relative should not be there. Such a declaration we should take. That's point number 1. Then appointment letter. After appointment letter, we should add the CA. Class by class verification by one partner, review by another partner, and MRL covering entire aspects. Anything we are mentioning in the observation or qualification, we have to have the MRL backup. For the MRL backup, how you have made the decision based on the MRL, what you have decided, that note should also be there. Maintain audit trail for all the adjustments we should have. Any addition, deletion, any disallowance on 44A, 44B, everything we should have in paper. Obtain third-party confirmation where possible. Let us write based on the address available on the invoice. This is the best practice. Let us write that the reply may come, may not come. That is different issue. If it is coming, we have to consider that. If there is no reply, let us have it on our records. But it is our duty to write and take the confirmation from the third parties. Yearly engagement with the client for data readiness is very important, as we have already discussed. The same person is tax auditor and statutory auditor. It is having better food. He is having better food. But in other cases, it is better. Once the form is ready, you send the checklist to the client. This is the form, this is the data required, because this class 44, they have to compile It is not readily available. Generally, they are not capturing those data. So they have to compile and give you. They need some time. Send it in advance. Use software tools for class-wise tax audit report review. So many tools are there. Even in many sophisticated thing, tax audit related thing, it is culling out and giving you the report. Statistics related report it is giving you. What we have to do, let us assume any payments made on Sundays, any public holidays, it will give you the list. You can take it and ask them why you have made this. All those things, it is readily available. AI tools are there. To make use of our time very effectively, we should use these things. Cross-check the consistency with the GST return and TDS. This we have discussed extensively. All these things will safeguard us. Next slide, sir. This we have discussed. Next slide, sir. Next slide, sir. We have discussed all these things. Coordination with the clients, educate clients about timelines for payments. These are all you can make it in advance if we are the statutory auditor or during the course. You can inform them if you are making the PF payment, ESA payment after the due date of the respective law, though employer's contribution is deductible, employees, they cannot get the deduction. They have paid, but it is not available for deduction. They may argue, sir, I have paid within due date, all those things. But these kind of educating the clients is very important to save our time while we are preparing the tax audit report. Share the tax audit, the checklist before year end. All those things will help them to compile the data and capture the data while they are feeding the forms. Next slide, sir. Future of tax audit, increasing digitization and AI scrutiny by department. This is going to be already, somebody might have come across that based on the tax audit report and the income tax return, the department is coming out with some mismatch and they are throwing some messages to us. This is the defect we have identified. Within 15 days, kindly close it. Since the mails are going to the client, we are not aware about that. Then resolving the time has already gone. All those issues are coming. The department is using more and more softwares to cross-check, to reconcile, and to throw the mismatch items. In these cases, it is our duty to in advance do the reconciliation and complete it. Next thing, sir. Next slide, sir. Our direct tax committee is doing excellent job. The guidance note, they have given one exposure draft, and based on the recommendations, reviews, and suggestions, final guidance note has come. We need to go through. They are covering all these new classes, new additions there, and institutes terms of references from the this document is available in the site of the institute. Please go and read that, download it. It is available at free of cost. Institute is conducting awareness programs for members and training for members. On the new classes alone, they have conducted few classes this year on the MSME recently. That also we can make use of it. And in the institute portal, YouTube videos are available about these classes. We can go through that for our clarity. And there they have excellently covered class by class these things, like our other members are going to take up from tomorrow. That also we can make use of it. Next slide, sir. These are the key takeaways. Apart from that, I need to cover few queries we have received. We need to know your client norms. That is separately, if we are the statutory auditor for that company or not. It is better, let us know your client. This has been prescribed by the institute. Like we are giving to some other organizations like banks, Let us take that basic PAN, Aadhaar, Constitution, proof of address, everything. It is to be taken every year from the client, and it should form part of our basic documents for that particular year. Know your client norms. We need to take screenshot of the portal of the assessee, or if they are, ask them to take the screenshot, get it attested, and keep it on your records. Like what's the balance available in the electronic credit ledger, or there is no notice available on that date. All those things we can take it from the client. Attested copies we can take it, sir. If, let us assume one case, if there is a different view between the statutory audit and tax auditor. Statutory auditor has already completed. So we are differing on a particular treatment of a particular item. We have, that is, a tax auditor is having all the right to mention that in their tax audit report about that particular difference of opinion. Because but before you are doing so, give that information to the management. If it is material and if it is having any impact, that impact should also be reported in the tax audit report. That is 3CA or 3CD accordingly. 3CD, we will not report any of our own our opinion or qualification. In 3CA, we need to inform this on what is the material difference and what will be the impact. That should be intimated in the 3CA under class 5, class 3. In case there is a error happened in last year 3CD, now only we came to know that. Then I was the tax auditor last year also. It is a material error. Then we can revise the tax audit report now. We need to mention what is the error, what was the impact, why we are revising the return. That should be done. But we can revise the previous year tax audit report also now. In another situation, a sole proprietor is having 4 separate proprietary businesses. 4 separate proprietary businesses. He is having business in 4 different states. Under tax audit, PAN tax audit is PAN centric, PAN based only we are filing the tax audit report. So we will consolidate and we will be reporting all the turnovers. All the turnover will be considered. Let us assume another case. In a P&L, he is having 44 AD also. In that case, that should be reported separately. A person can have 44 AD as well as the other turnover. It is possible, and the form is also having a separate clause for that. So if in the P&L 44 AD presumptive income has been included, that should be reported in the form separately. 3CD, it is accommodating that matter also. In another case, a person is having a business and there are personal transactions are also happening. In his profit and loss account, he has included his sale of land. That we can exclude and that need not be considered for gross profits amount arrival. Excluding that capital asset sale, we need to arrive at the business receipts, because that is going to be reported under the capital gains head. Another thing is, normally few chartered accountants are e-filing their client without the signature of the clients. Few are uploading the balance sheet and P&L. we need to attach profit and loss account and balance sheet, and it should be signed by the client as well as the chartered accountant. Then it should be scanned and uploaded. And that profit and loss account balance sheet with the full schedule should be uploaded. Not one single page, it should not be uploaded, because we are attesting all the schedules forming part of this account. So schedule 1 to 21 or 25, that should also form part of the balance sheet and profit and loss account. If it is a company case, if it is a 3CA, then that Companies Act audit report, CARO report also should be accompanied with that profit and loss account balance sheet. Whether the department seeing or calling, that may be remote, but as per the requirement of law, audit report accounts are together, it should go in the case of 3CA, because we are certifying that other act, other report, and it has been enclosed. We have to be very careful while we are attaching all these things in case of 3CA. In case of 3CB, this auditor, that person who is doing the tax audit, and the assessee should sign, and signed and scanned copy should accompany with the 3CB and 3CD. In few cases, uploading the forms through tax auditor's IP address, whether it be done or not. This has been a question many have, because the client may not be in station, they may not have that infrastructure. In that case, it is advisable to take some consent document from the assessee. Consent document in the sense, my person is doing, or I am giving consent of uploading the forms, attachments, tax audit report, the audit report under CARO from my tax auditor's system and IP address. Those consent form will be helpful in case of any issues, because they should not say, without my knowledge they have submitted, I don't know anything what happened. Normally, we should not presume that management representation letter will absolve us from any problem. It will help us. We have taken steps to understand, do the audit, deliver the proper reporting, proper opinion to the department and assessee and other stakeholders. It will not completely absolve us, but it will help us to much extent that we have acted prudently, professionally upon those areas. That's where our guidance notes and the standards on auditing practices will be very much helpful. I request all the members to see the guidance note and all the SAs there they have given. Even in 3CB cases, there is specific SAs are there. That report we can have, we can attach, and we can issue and take acknowledgement from the client also. Our audit is restricted to only tax audit. This audit report is part of our attestation to the balance sheet and profit and loss account. Something like that we will write, and we can issue the report to the client. This will help us if there is any misuse. This will help us, because our role was only to the extent of tax audit related columns. 3CD related columns only we have verified. Not blanket, we are not certifying their turnover is right, their purchase is right. Those things, it will be helpful. We have to take the MRL, and with the MRL, we have to also submit the audit reports wherever 3CB is involved. About F&O related transactions. For derivative and F&O related transactions, turnover includes gross receipt from sale of derivatives. So that is all coming under PGBP. That turnover also should be accounted and reckoned for the purpose of this 1 crore or 10 crore as the case may be. Our guidance note clarifies that include premium received on sale of options in the turnover unless the premium is already included in the net profit. So I request the guidance note should be verified on each specific aspects. It is soft copy is there. We can put search and we can take the keywords and we can verify the particular area. I think I have covered overall tax audit related matters. If there is any specific questions, if the SIRC is okay with that, we can take it up if time permits.
Please go ahead, sir. If anyone has any further questions, you're welcome.
In chat box, few questions are there. We'll try to cover up. I will try to cover up. 1 second, please share MRL. Sir, please share copy of yes, sir.
Sir, while reporting 269 SST, this is C. Anand Pallad from Kalburgi,
Yes, sir.
Karnataka.
Yes, sir.
So while reporting 269 SST, this time there is one pop-up which is coming up that each and every individual entry is to be reported.
Yes, sir. Yes,
but
sir.
practically it is very difficult where there may be hundreds of loan taken during the year with the same person and repayment done. So
Yes, sir.
is it okay if we mention the lump sum figure with a note?
Sir, I would suggest see the drop down is there. In the drop down, you can see cash payment, cash receipt payment. That's what you are referring, right? That class number 31.
Yes, sir. That more than 269 SST loan received during the year and loan
Yes, sir.
repaid.
Yes, sir. That is class number 31 of 3CD. What they have done, they have given one drop down box now. In the drop down box, nature of amount of receipt or payment, their cash payment, cash receipt payment through non-account payee check, because many things we are not capturing while we are accounting those things. But they say each item they need, if you can put it in one basket, you separately add one list, scanned copy of a list, and you can put as per list attached. Because even I was told while I was going through some literatures, they are not allowing us to net it off. The same person have given and taken. You don't net off, you give separate line item. That's what we have been advised.
No. We will give the gross figure of the receipts and gross figure of the payment separately, no doubt.
Okay.
But suppose there are 50 entries from a single person during the year loan received, and repayments are, for example, some 25 entries. But entering all 50 and 25 will be difficult.
Sir, if you have that separately, those things separately, you have, if you have in your ledger account,
okay,
and that is not violating 216 SS, you take a printout, add it.
Okay.
That's a better. Yeah. 3CD, along with the 3CD, you are going to attach your profit and loss account balance sheet, your tax audit report. With that annexure to class 31, you add it. You get it, get the signature of the assessee and add it. Not your signature. That's better.
Means you mean to say that ledger extract of that?
Exactly.
Of the loanee. Okay.
Yeah. Take the signature from the assessee and add it.
Sir.
Yes.
Yeah, thank you so much.
Yes.
Sir, this is Saravanan Subhash.
From Chennai.
Sir, this is Saravanan Subhash. Sir, what is the due date for filing ITR for this current year audit case, sir?
Sir, they have extended up to 31/10 as of now for tax audit reports.
Yes, sir.
The court you might have seen, the court have discussed about you can only give the extension for all income tax returns as per 139(1). If it has been given, automatically you have 1 month before you have to file your tax audit report. That is the implication as per the law.
Yeah.
You don't have any power to extend the audit report alone. That's what the judges comments.
Yes, sir. As of
The
now.
department is working on that fairly as on date. What knowledge you have, the same knowledge I have. 31 ton is the due date for tax audit report. Hopefully, the government will extend the date for 30/11. But it is my personal opinion. We need to wait and see how what the government is going to do.
Yeah. Thank you, sir. Thank you for that.
Yes, sir. Yes, sir.
Sir, I'm Mohammed Shafi
Yes, sir.
from Chennai. In
Yes,
the
sir.
MRL, the client says he does not liability for liable to register with the PF and ESI. But in the opinion of the auditor, he must register with the PF or ESI.
Yes, sir.
But MRL says I'm not liable.
Yes, sir.
But you have to report separately, correct?
Sir, now as far as this PF, let us take another example. He is doing turnover of more than 2 crores or 5 crores. He has not registered in the GST also. What he will do, sir? Apparently, we can say he is liable to get registered under GST. He has not registered. He says I need not register. So now there is a requirement under the institute regulations that if there is any violation under any other law, it is our duty to report. Any other law means we need not go to any forest act. He has cut any sandalwood, all those things. Immediate act, immediately our applicable economic laws he is violating. It is better we will disclose. Somewhere you disclose in comments or in a separate note. Somewhere it is better for us because primarily it is our duty to ensure that he is complying with the requirement of this economic related laws. In few cases, what I have told is a practical case. He is doing 1.5 crores turnover. Sir, GST I will handle, sir. Let us file tax audit report, sir. It is better, let us report. He is under the obligation to register under GST. He has not registered. Up to that, there may be some violation. We cannot quantify. Just you report. That is advisable course of action, sir.
Okay, thank you very much, sir.
MRL, they are giving what we are deciding based on MRL is a crucial part.
Okay, wait, thank you, thank you.
Sir, somebody has asked any copy of MRL. Sir, copy of MRL, everything is available, sir. But I request you have separate unique MRL for each company. Even if it is group company, you better at least change a paragraph and have it. Not the same copy paste and other things. Because MRL is very crucial. That is one document which is ready, which will demonstrate we have done something. I have asked, they have responded. MRL is very important. Don't go with any standards or any template related things. In case of business having turnover below 1 crore and wants to show profit below 6%, will this kind of business will be counted for tax audit under 60? No, it will not be counted. What is the due date we have? Sir, if I have presumptive and non-presumptive business, and my non-presumptive business is subject to tax audit because of threshold limit, presumptive also, no, sir. The question from Ms. Priyanka Mehta, I have both business presumptive and non-presumptive. Non-presumptive alone, we will do the tax audit. Presumptive amount, we will disclose in 3CD. That's what we have discussed. Should we include presumptive turnover also while calculating? Not required, sir, not required. In case of 3CB reporting, what should be reported by an auditor where entity was required to get registered under GST law because of turnover? But entity, this I have told, it is better you put it in the observation. Anyway, let us know this aspect. Their turnover is 2 crores. They have not registered under GST. Now there's a MOU between GST department and the income tax department that turnover sharing is happening. From income tax department, data will go to GST, that jurisdictional officer, they will send the letter. As per this, you are having turnover, you have supplied this much, that is there. But to safeguard our schemes, we have to put it in the observation column, in the 3 or 5 of the column. 3CB, we have to mention it. Clause 44, if give unable to comment 3C in 3CA, then UDIN, we have to give qualified opinion. Clause 44, if I give unable to comment. Sir, clause 44 is about to breakup of the expenditure based on your GST inputs. If you are not in a position to give, then it is not a full report. That you have to justify somewhere. Data not available, not in a position to. That you mentioned in the 3CA, as you have rightly mentioned. You mentioned in the 3CA, that column you are unable to say something. When generate UDIN for tax audit, there is new option, is audit opinion. Kindly explain the option and which one you select for report. Sir, this is what we have discussed. That opinion, if you are giving any qualification in 3CA, then you mention there. Only observation, you leave it. That is the originally when they are bringing that UDIN, they have brought scanned copy we should attach in the UDIN site. Then that has gone. Now we are giving only figures. Now they are back to this kind of things, opinion nature. And I was told in slowly in AOC 4 also they are going to bring this kind of things. Any qualified opinion, anything like XBRL, it is going to come. So we should be very clear and we should very good in documentation related thing. Otherwise, we cannot fulfill these requirements. In ITR form as well as in 3CD, disclosure of total turnover is required, whether GST turnover includes sale of fixed asset as well. Therefore, sir, GST turnover and IT turnover will never match. You have to have reconciliation statement alone. You need not worry about all other things. If client does not have details of creditors who has MSME certificate, then how to mention? It is recommended that we should see that invoice. We have to write to them and get it clarified from the customers, that is suppliers, that whether they are MSME or not. This is a recommended thing. If it is possible, you please do it. Send an email or letter to them from based on the address available in the invoice given by the vendors. This is what the guidance note suggests. Whether tax audit is mandatory for showing profit less than 8% in case of business and 50%. Not required, sir. Not required. Whether derivative turnover comes under 44AB for the shareholder and broker or shareholder, is it okay to go with? Sir, if it is F&O, it is profit and gains. Then you have to apply all the thresholds. If it is not, then you need not worry about it. In derivatives, we have discussed about something. Sale of derivative should be included as a turnover for the purpose of 44AB threshold calculation. So we need to see. Are dealers covered under MSME or only manufacturing members are for reporting? Sir, there should be MSME. I may be a chartered accountant, I may be a doctor, I may be whatever. I am a assessee, I am covered under tax audit. My vendors, whether he is a MSME, if the answer is yes, then we should see whether it's a small or medium. If the answer is yes, then I should see. I can be a service provider, I can be a manufacturer, I can be a trader, I can be a wholesaler. That assessee can be anybody. Vendor should be only we should see. Dealer registered under or dealers covered under MSME or only manufacturing companies for reporting it. So that's what we have discussed. MSME should be the vendor list we should say take, sir, first. That is creditors, current liabilities, creditors list we should take, whether they are MSME or not. Then let us go to the 31.3 balance. What is the age of that 31.3 balance? If it is already exceeded 45 days or 15 days, straight away disallow. Supply has made on 31.3, whether payment has been made within 15th April or March 15th. Not made, disallow. If it is made, leave it. That's all. Like that only we should see all sundry creditor aspects, sir. Madam, time we have exceeded. If it is okay, you take the questions, we will try to answer offline.
Yes, sir. Yes. Okay, sir. Thank you. Thank you very much, sir, for this very detailed. It was like sitting as a student in a class. You've been so patient in taking the class as well as clarifying all the doubts. I request all the members to send your queries to us by email. We'll get it clarified from sir, and request you all to come back and join us again tomorrow for the next session. Sir, Shankar sir, thank you so much for taking the time off and spending your valuable experience with us. And as sir said, I think that members will by now, he has been reiterating about using the guidance note, as well as taking your client's signatures on all the various documents which you are keeping as a backup, and also adequate training for your articles, for your students. Train all your staff and your team. Sir, thank you very, very much for sparing the time.
My sincere thanks to the branch and the chairman for this great opportunity. Thank you for the past participants for patient hearing and many practical questions. Thank you.
Thank you, sir. Thank you. Yeah.
Thank you so
We'll
much.
meet everyone again tomorrow. Thank you, sir.
Sure.
Thank you. Yeah.
Sure.